All right. Good afternoon, everyone. Welcome. It is Wednesday, March 18th, 2026. I was on the morning show today with JC and Straz. I hope you guys watched and tuned in. I did not like, let's get right to it. Do not like what happened in the market today. We usually do a 1 o'clock show. We wait to do, after the close because it was a pretty active press meeting and not really giving warm fuzzies in the market. Let's take a look at the screens. You'll see exactly what I'm talking about. Really no place to hide today except hard assets, commodities. I'm talking about oil, pretty much, gold, a lot of unwinds from those old safe haven trades. So let's get right into it. Staples, this one I knew today was going to be a bad day. Staples opened up and they were way off. Gold miners, I was talking about this yesterday. Full disclosure, we're talking to a user, a subscriber yesterday, and I said always check if options are worth the squeeze and enter those, selling those GDX 90 puts. Full disclosure, and I always follow the system. And I said also do it in a spread. Always do it in a spread so you can be able to afford it to sleep at night. I was going to say, if you sell the 90 puts, buy them back. I buy the 87, for example. Always have a spread. Anyway, the turtles today instructed me on the low here on GDX during the day in his profitable position. I entered a short of GDX. I couldn't believe it, but I have to follow the system and not be something as silly as right. It's not about the he said, she said. So that's what happened. We are short at GDX. It worked as everything basically got unwound today. So gold miners, the real pain today was in Staples, gold miners, and the Dow Jones. Honestly, there's several more areas, but those were big parts. And to the upside, volatility, natural gas, and the dollar. I'm not going to feature the dollar today. There's going to be enough to get to. But volatility and nat gas were really the only things that really went up. So let's take a look. Micron earnings are happening too as we speak. Pretty important in terms of the market's bullishness, in terms of that sector, semis, which have been holding up a lot. Let us get into the things. All right, let's see here. Dashboard panel. Here we go. Can you hear me? Let me make sure the audio is working. I think so. Someone put a thingy up there. All right. So the S&P will get to down 1.3%. Ugly. Q's down 1.4%. Tesla down 1.6%. Do note that Micron finished flat going into the earnings. It had been up today, up 64% year to date. Crazy mid-March. Gold down 3%. They let it go a little bit here. Still up 30% in the year. Microsoft down 2%. Amazon down 2.5%. Meta down 1%. It had been up, I believe, yesterday on the report that they're going to let 20% of their staff go due to their investment in AI. So it's not just AI replacement. They're going to have to let them go because of the cost, because they're going to have ROI for some of these companies. Broadcom down 1.6%. Not enjoying the, it was really specific semi-love that AMD got in on. Apple down nearly 2%. Google down 1%. Palantir 1.5% lower. And that's about it. Let's get to the intraday tape here for the S&Ps. They were ugly all day. The PPI number came out this morning. Obviously, the market did not react well to it. We tagged VWAP basically at 10 a.m. and they said, nah, see you later. Truly, we couldn't even make a contact with a sliding lower VWAP on a short 5-day basis here. We tagged it at 2 o'clock, right when basically they held decision flat, not to cut, not to raise. And then from that, lower and lower. Here's where the presser was going on, where Powell said, Trump's going to have to remove me. Otherwise, I'm, essentially going to stay on. So a little bit of a battle there. So he could be, making Warsh technically the weakest Fed chair to come in, because he will still have a vote, Powell, if he wants to stay on. And then that adds uncertainty to everything that's already been going on here between layoffs, a war, a credit crisis underneath with Blue Owl, KKR hit 52-week lows, and then it really just went lower and lower and lower. And I always tell you, I don't stop breathing when I take these things. I say the easiest trade, this was a short one, a breakdown from a former area mixed with oversold. This one would have been a little bit late in the game, but easier one would have been here. Right when that looked floor right here at 666, sign of the beast, broke, I knew we were going lower. I was working with my Claude, and right there we started really sizing the GDX position. I was weighing whether or not to get in during Powell, the presser. And I actually did end up getting in right at a touch under VWAP on the day for GDX. So happy to be in that position. I think it has a couple bucks to give now that support broke. So be careful if you did sell puts, and always right size those positions. We always say that it's a risk management game. You got to stay in it. So S&P on a short term, ugly close. VIX closed out on the highs. We'll get to it. But ugly day for the S&P. As I zoom out, I said, want to stay away from, you got to change when the market gives you different pieces. Hold on. Whoopsie daisy. I think it flattened out here. One sec. Give that a second. So when, we're putting together puzzle pieces here, and what's going on here with my charts? Let me see something. Anyways, I'll talk to it, but you always have to. We're putting together high probability puzzles, here. So you got to do really. You don't have all the information. What's going on here? 1 second, guys. Un momento, por favor. Apologies. Let me see here. So S&P, I'll talk to it while I pull the chart up. I don't know what happened there with the bar chart, but the Qs are within 0.5% of the 200-day moving average. So if you feel like you're not that bullish, that's why. Yes, the S&Ps are 4.5% away, I believe, from new all-time highs, but you are at basically within 1% of the 200-day moving average, and that's exactly why you don't feel those warm fuzzies. What is going on here? I apologize. I cannot. It's not loading here. All right, here we go. Oh my goodness. Let me just bear with us. All right. We're nothing without the charts. We need the charts to load. I need to show this SPX 1 year. Also, bang. Okay, we're back in business. Let's go. All right. Also, this is pretty crazy. Again, not a massive overlay guy, but I do look at them from time to time when they fit. We'll get to that in a second. I will, but look at this tag today. The 200 moving average on SPY, 659.76. Okay, the low today, 659.90. So we got very, very, very close here. Absolutely crazy. So we actually, we went under right for a second. Qs are worse, but we're not going to look at all of them right here. A lot of this energy, when we say which way is it going to break, which way is going to break, you have a cement wall here of 675. Then you start lowering your standards here, right? And you have lower highs and so on and so forth. What happens here? Do we get oversold? I said the S&P is not going to be the place to be with this war. This overhead is starting to look tougher and tougher. The ensuing rallies that you will get over the next 2-3 weeks over dead cat bounce or de-escalation rumor, I think will only get you to about 680, 685 around that point. I don't think we're going to be a rocks throw away anymore from the all-time highs in the SPY. So sun is setting for a tough, quarter or more for SPY. I think overall in the year, it'll do probably just fine. But also the one I want to say about the overall, I'll do is really fast. On the 2-year, in terms of stochastic momentum mix, how stock corrects basically in accordance to itself and with velocity. This is the exact look at the formation here from the highs of January 28th to what you've done here in about 2 months to right about here from January 23rd of 2025 almost to March 10th, almost like the computer's like the same date. It's basically a year forward and back. We are exactly, see this tag of the 200 moving average is what this candle is right here. And then of course, we all know 1 month later, we were looking at 52-week lows. So we shall see if the market corrects. I'm looking at levels here of where, we could fall. I don't think 650 would be much of a flush out. I think it would have to go lower. And I'm looking at these levels possibly at 615, going with the former February 2025 highs before we went into the whole Liberation Day issue, if you call it that. And as you know here, that was a level that we had been really having a hard time with from December of 2024 through Feb of 2025. That wall of 615, I think that old resistance will become our new support. So possibly, should you see this start to flush, and you know how it happens, if we start to see 3-4 closes here under 660 in SPY, I think you could be making a cascade lower towards 615. The VIX is continuing to climb. Let's get into the things that moved here. I really want to see where the bulls stick in. They did not stick in today. And I'm starting to see this support start to wobble. We don't like moving the goalposts every time. 670 cement, then 650, then so on and so forth. Now we're looking at what? 615. So situation's not getting better at the moment. Let us see exactly what is under the hood, the internals, since that is what we do here, charting those. So let's look right, as I said, multiple sigma movers to the upside. Volatility, a big mover, and it was up before Powell, through Powell, and after Powell. So it wasn't specifically what he said, but it was, the market was twitchy pretty much all day with Iran strikes too. I think they're saying basically we can start to hit airfields in the Middle East, and things are ratcheting up. Market doesn't like escalation, it likes de-escalation. So VXX here again, TA, technical analysis, is not astrology. I believe in getting that 200 moving average really an absolute exhaustion if it has more to do. Or not. Right here, again, the short-term moving averages turn higher in volatility. We have absolutely been in an elevated environment since that tranquility period ended, to be exact, on the all-time low of VXX on January 9th. That's when the good days ended, early January. Ever since then, we have been crawling from a 26 handle here in VXX all the way to a 35. That's a pretty heavy move. Now it's running into resistance here. That exact figure is 35.70. I was looking for it today. They got to 35.15, essentially closed on the highs. Don't like that above a 200 moving average. It has not been sustained above a 200 day. Let me go back to a 1 year chart here. There you go. It has not been above the 200 moving average since June of last year. Okay, June 2025 was the last time we were above the 200 moving average, convincingly holding on in that really significant fearful regime. What we don't trade hope, we trade the charts in front of us. This $30 level in VXX, I hate to say it, and that's directly adversely correlated with saying that new top in SPY looks extremely rich at around that 680 level. That's exactly correlated with this new potential floor being put in at VXX equivalent level at 30. I hate to say it, but that's what it looks like here. And even when things subside and you get some sell-offs here, it'll reduce by about 5 points or so, and maybe that 30 is the new floor. So that's not good for overall equities. And again, VXX bid above 45 RSI going since January 26th. So repricing of volatility and risk premium from institutions and retail alike. The next up mover today was UNG. But last thing on that critical point, VXX going into the 200 move here. If you see a VXX, I know some people look at UVXY. If VXX, if it goes and starts to hold above 36, look out. The market is going lower. You're absolutely going under the 200 moving average in SPY and likely staying there for a little bit. If this goes above 36 and holds, look out. Look out to go below Mortimer. By the way, I told you about the portfolio. We're short GDX. We're short KRE. We're short Jets KRE. And we're long Shield. And what was the other thing that we said? Short, oh my gosh, Jats, KRE, GDX, and long Shield. So really boring. I wish it was the Nikkei market. We're buying the EWJ. Wish we were buying, South Korea, silver, gold, all kinds of beta and leverage plays, but it's just not the environment we're in, very, very unfortunately. Okay. Let's go to the natural gas. Natural gas, a big move today, correlated, of course, corresponding with the strikes here, making this a heavier commodity asset. So here's the thing about nat gas. The war started, we're in the second week here. This still, again, this is UNG, not nat gas futures. We have not been above a falling 200 moving average ever since that whoopsie of a week at the end of Jan. So we're still not there. It's getting a nice spike today. I just still really don't trust nat gas. I mean, if you want to play the war, play war. I'm not talking about Uno, the card game. if you wanted to, trade off the war, it would still be BNO or my next Brent oil, which hit new highs today, or my next chart, PDBC. I still just don't love the nat gas play on it. And if you did, you are long, I would still get out around that 13.5 level. So maybe a little bit more upside due to the correlated bid of the geopolitical risk premium that's going into the entire commodity complex. But I wouldn't hold my skis for so much here in UNG, especially given that just this 13-15 level looks like it's been a ceiling, ever since the war started, and before that by a month as well. So, but the thing that did hit new 52-week highs today, if you want to play, it's the fire regime here, hard assets. He didn't say anything about inflation going away anytime soon. If oil stays like this, say until the next meeting, diesel is rising more than consumer, gasoline. They will pass it on to you. It will hit you. It will hit everyone. So somewhat, I don't know, for people that are super well off, it's like, it's $5 a gallon, I don't care. They are, people shipping cookies to you, and the drivers have to pay that much more. Nabisco will pass it down. At some point, you will have to pay more because it costs them more to get it to you. They're not going to lose profits because it's tough, because the war break. They're going to protect the shareholders. PDBC new 52-week highs here. This thing is in absolutely nosebleed territory here. A beautiful break here. It made you pay because right here was that break back in January 22nd. And look at that. It went quickly to 15 quarter and then fell right back to that point. And then right here was truly the breakout, the weekend of the war. March 3rd, 1520 was that breakout level. Still overbought. 79.5 RSI. Amazing bullish engulfing handle today. New 52-week highs. This thing probably heads to about 18 handle, the commodities basket. So this is where the smart money is going, putting into actual assets. Look at this chart here. Absolutely looks stupendous. PDBC, you can chase it right here. The ATR is 39 cents. Make the math easy. Call it 40, 80 cents. So you could chase it right here at 17.5. If it goes against you by 80 cents, abort, because it likely heads lower and mean reverts probably closer to about a 15.85 or so. So that's the way I would play that. All right. So again, goes to about 1670, get out. It's probably headed to about 16 handle. That would be the way to play that one, in my opinion. Okay, and this is when I knew the market was going to stay down today. Staples down all day, down 2.5%. And yes, I know they have been unwound for quite a while, but look at this candle. This takes you all the way back to basically the area of the breakout. So just slightly below 83.5 was that level, and now the 200-day moving average is right here for basically the safest asset, or one of $81. It's getting very close to it. This has been truly, absolutely fell out of bed since right here. This gap down when it was down 2% on March 5th. That was that was 13 days ago, and that is when we lost the 50 RSI. It had been really strong then since going above the 200-day moving average. So I'm kind of seeing a symmetry here that it wants to close that gap and at least tag 81. You think that's why I knew today was going to be a different kind of a vibe when they were abandoning this too. It was not to safety. So here's the deal with XLP. You got to let the dust settle on a lot of these things. Start with sizer positions. I wouldn't just try to be a hero here. There's a lot of good traders just being quiet, not doing a ton, and I understand it frustratingly. This looks like it has a little bit more to go, potentially. I don't like the candle today. That tells me no sign. You got to see that today is down 2.4%. I want to see that get cut in half, down 1.5%, 1.25%, down 50 bips. And by the time that happens there, it probably stabilizes around $81. The deal is I actually do think it's an okay buy in this elevated vol environment. If what we're saying is going to happen, it makes sense with the thesis a bit. I do think this has a bump to about 86 over the next couple of weeks, but I do think it heads lower first to about 81. I don't think you're going to get paid selling puts. I don't really, I don't think definitely you're not going to get paid selling the 85 calls in this or anything like that. So it's a difficult environment across the board, but I do think this is setting up once it very likely tags at 81. That candle today tells me there's absolutely, they were upset the bell rang today essentially because they wanted to sell more staples. Okay, and that's reminiscent of the entire market too. But today, an ugly day. That was a multiple standard deviation mover. That's a freight train for staples down 2.4%. Let me talk about the short position I entered, and then we were just talking about yesterday, on Monday rather, selling puts in, and that's the market. Sometimes you got to trade the market in front of you. And we thought, and this is what happened. We thought this was a brick wall, similar to the S&P 670 before, 680 once upon a time, and it kept on moving. Now, what happened here? We thought that was a wall. 90 was me already discounting a bit. The wall of decent support was right around 91.5 was where I had charted it. Boom. Today when I saw VWAP was 89.90. Once I saw that and I started seeing the candle continue lower and lower, we'll see how ugly they take this one lower. I think you got to give this one a little bit of dust to settle as well. I am short. I thought this would hold around, like I said, $92. This one looks like a little bit in free fall. I'm trading it based on that pattern. I do think this could move. I'm not so sure due to the strength of the story overall, year over year, and even more than that, 2 years, a year and a half, really with a lot of velocity here. I'm not sure it tags 76, but who is to say that it can't get to about this right here, this $82 level that had contended with going far back all the way from October, and then it's proved our support in early December going into that Fed meeting. So that's still a nice $5. I'm going to pyramid into it, and that's how you have to try and make money in this market as it starts to be nosediving. Stochastic momentum mix and the RSI seems like it may be headed for oversold for the first time all year. That could be a regime change, a massive signal in a defense a safe haven trade that has been, in addition to talking about the staples that we just talked about. So this is what made me, the hair stand on the back of my neck, say this market looks like it wants to, crash in that 615 level, and SPY started to look a bit more appealing for the next couple of, whatever, how long it takes. Here it is, the Dow. The Dow, oh my, the Dow. Old economy, right? Under the 200-day moving average, the DIA, okay? We were just applauding it, saying in February 10th, all-time highs. I'm looking at the ETF up to $505, and they said no interest owning this thing, and I'm determining that by going under 50 RSI as of February 27th. So this has been, 3 weeks now. We came in that Monday, VWAP was 488, and they said no thanks. And look at that ugly doji here, where you thought that was the big bounce March 10th, 8 days ago. Ugh, it was a flat day, and it continued to fall off. So until today, markets had been doing what you'd wanted them to see. I mean, even this morning, we were talking about that quite a bit on the morning show, but we were looking out for these warning signals, and the Dow closing under the 200-day moving average for the first time since June 23rd is, to me, a big story. I thought this would, stabilize right around that 466 level. I didn't think we would pierce underneath, and the market had other intents. Ugly looking here. You need de-escalation news, and I do think this would mean revert to about 480. But again, the times of the former highs, get that out of your head for right now. That is not happening, I don't think, anytime soon. So those are your levels. Super difficult. Don't want to sell puts on this. That's a bearish engulfing candle that takes you all the way back, my gosh, to essentially the Thanksgiving lows. Just not a great tape. These are where things got slaughtered today. Staples, gold miners, Dow Industrials, as we're likely eyeing less cuts. You might get 1 or 2 at the end of the year, and who knows what the labor employment picture looks like at that point. All right, top 3 gainers of the past 5 days. What has absolutely been slaying this market? If you've been crushing it, what are you long? It's the same ticker we've been putting in, it seems like, for 2.5 weeks now, is U to the S to the O, up 2.5%. Someone, I said this as well on the morning show, Fugazi on, if it was a diplomatic move, allowing the tankers go through the Strait of Hormuz, I don't think the market's buying it because the oil price should have come in a little bit on Monday when the decision had been made and the market told you no, it did not happen. And today, strengthening up 2.5%. This looks like it obviously wants to go higher. It looks like it wants to target 130. Bullish candle here. That's pretty much the call. I think it's headed to 130. You can chase it right here. It's a super obviously volatile. It's a $7 ATR, so 1.5. You can chase it right here at 123.5. If it goes against you to 113.5, get out, because that's likely a sign that it is finally mean reverting to about around 100. So save yourself that difference. But for right here, I do believe the trade is higher. I think this heads to about 130 USO, up 12% over the past 5 days, on average of 2% and change a day, doing exactly just that. 80 RSI, giving me no signs that this is done just yet. View up on the day 121.17, held that, just A plus USO, A plus, eating everyone's lunch. Number 2 trade of the past 5 days, it's volatility. We already talked about that. This thing is becoming a rising star. If you see it truly start to close above 35.70 for several days, look out. look out. You're going to have your aunt calling you saying if should she start pulling money out of her 401k, should I start contributing, or pulling back from my kid's 529 plan? All those things are going to start to occur. Your taxi driver will be talking with you about the markets. You're going to be not in a good place in the papers and the media and everything else. So psychosocially, if you know what I mean. Okay, so that is the number 2 gainer of the past 5 days, up a percent in change, just a little bit more than a percent a day. Today, absolutely crushing that, up 8.4% at the close, just sniffing its 200 moving average. We don't like that. It did that, of course, on the 6th and the 9th, and it has not done that before since June 23rd. Again, that's pretty much the vibes that we're getting end of June of last year, when we were finally getting out of that whole liberation mess. Okay, and then this is crazy in terms of the third gainer. It's Ethereum, due to some of the strength we've had when you had that release of pressure valve. The liquidity goes into Ethereum. This is really like the greed to fear denominator calculation. It's Ethereum to me. I look at it now as a gauge. It's almost like my inverse VIX. But right here, immense 200 moving average at 24.59. I don't like here that it's gotten to its 50-day moving average, and it got to Kembade both times, and now an ugly down 6%. I hadn't thought it was real. I think I lost subscribers the other day when I said I just have a higher threshold. I repeated it this morning about Bitcoin. I need to see 81K. They're not this fake it till you make it crap. I actually have to see something. The same thing for ETHA. I want to see at least close the gap here, get towards $20. You're still 20% away from a full and 200 moving average. Show me something. And that's all you can do is get to the 50, not even $18 handle. So I think that was it for right now. I think 2 things. I think this drops, ugly candle, obviously. See how it trades overnight into tomorrow. I think this thing's going to revert back to about the $15 level. So ugly southbound move for Ethereum upcoming, but it has been the 3rd best trade of the week. But I think that is just a reverse of the rubber band getting too extended here for 10 days. And we're about to give up 50 RSI, where sellers really take control over buyers. Top 3 losers of the past 5 days. If you were in these 3 names the past 5 days, this is where the pain has been in the market. A lot of these are correlated in terms of number 1. There's a little bit of difference in the dispersion here. This is 13% down in the past 5 days. GDX nearly 3% a day. Today, 2x that, down 6%. Hence why we entered the trade. This has not been, like I said, above 50 RSI. It reminds me of Bitcoin in that when the high gave out, buy 2 days later. So GDX highs 117, 52 high. And then 2 days later, they push you up to 102, and boom, from false moves come fast moves. We had to ADA here, what is that? I was looking at it earlier, 2-month lows. So, and on the break, it seems of getting oversold. GDX, the worst trade on the board. You think, wait, war, safe haven, go into this. These guys have energy costs, massive energy costs. Gold is somewhat holding up. I know we got hit today, but in terms of this reduction here, it's not down the same percent versus GDX. I think it's down about half. That's because these guys get absolutely screwed with rising energy costs. Let the dust settle. Obviously, I am short here, so that would be the best thing. Don't do the opposite, I would say. This looks like it has a little bit lower to go. You have to look at trend lines. Horizontal to me in that regard. I do think this heads to at least $84 first. It fell very precipitously today. And if it starts to break 84, I think it's headed possibly to about 77. So crazy times. Never thought I'd see it. The story's not over for GDX. It's still, I believe, number 3 year-over-year trade. I wish to get back in. I love the velocity upside. They have not let this touch the 200 moving average all year. That's what I'm sticking with. I still don't think it does. But you saw what happened with the Dow today. You don't fall in love with the positions. Number 2 big loser on the week. So it belongs to XBI. Biotech not in a good place. It's down just 4% over the past 5 days. But again, it reminds me almost of the S&P. You see this rectangle, all this energy basically being bound between 131 and 118 going back to Thanksgiving. And, it's just generally a risk-off sentiment. Just don't love the move here. I think it'll be tethered. You need it to be tethered if you're long to 125. If it starts to break here, again, the level to see here is 120 half. The ugly candle today, ugly all across the board. We got to see how tomorrow trades. We'll check Micron at the end if they reported yet. But, really, these previous highs here from January 22nd, looks like a different market. This 132. I know it's only $12 or 10% away, but this looks like it's about to give up this energy and break to the downside. Again, sub 50 RSI as well for this group since March 12th, 6 days in the penalty box, and lowest stochastic momentum mix going back since last April. So I think this goes lower. Biotech. If you wanted, you could probably buy these 118 puts, but be careful. Everything's going to be expensive as hell. All right. And the XBI down 4% over the past 5 days, about 80-ish bips a day. Today, trumping that by a lot, down 2.5%. And then lastly, correlated with this, they got out of healthcare. When you see healthcare go down, you say, wait a second, that's defensive. They should have went into that first. But because the Fed can't hike, they can't cut, they're paralyzed. There's really no place to hide right here. And they started selling off bonds because Powell could be a vote and Warsh wants to cut. And then, Powell will be a very decisive, influencing vote to saying nay. So more volatility, on the back line of what everything we're going on. Healthcare oversold. Look at that, under 30 RSI because 30 is greater than 29.76. And that hasn't happened since going into the 52-week lows prior last time after Liberation Day. So not warm fuzzies from the market here. Healthcare, that defensive sector, peaked January 7th. Truly, when we're talking about that tranquility in the market, and this group has also been sub 50 RSI since March 4th. So talk about defense. I don't think so. This looks like it is destined to tag its 200 moving average. Hopefully that is the support it needs. And that coincides essentially with the lows of early November before it entered that really big overbought phase that lifted it, essentially catapulting it to its highs in the first week of Jan. But this looks like it's going to 145. You could buy those puts. Sellers in control tend to stay in control. It's down 1.6 today, down 4% over the past week. Does not look good. All right. Top trades of the past 5 days, including the session today. If you've been short GDX, I now am. Long USO, I'm short JET, so it's correlated synthetic trade. And long VXX, own some options, own some puts. I do not right now, but I do have a bunch of shorts on. You are absolutely killing the market. So that's what the trade is right now. Short GDX, long USO, long VXX until otherwise. We'll be back on Friday for a wrap-up of this crazy week. Boo!